entering the workforce. This has been an increasing area of focus as this area has been particularly hard hit. Those entry-level jobs just have been completely destroyed as people stay home. How much will that set this generation back in terms of wages, in terms of household creation? Is that factoring into any of your estimates right now?
Well, I mean, from a long-term perspective, you have to look at those things. I think some of the literature does suggest that losing opportunities in the very early stage of your career can be really harmful. So you hope that people are finding ways to invest in themselves and get some more education and things like that to get them on a good track. But there's no doubt that the opportunities available to new graduates this year.
How do we control coronavirus now? Listen to Steph. She's a bus driver.
Now that people are using public transport again, we really need to make sure that we keep each other safe. Passengers need to stay 2 meters apart. If that's not possible, make it at least 1 meter. I want to see everyone wearing face coverings over their mouth and nose, unless you've got a good reason not to. And when you get to where you're going, you need to wash your hands. We've still got to play our part.
Stay alert. Control the virus. Save lives.
Remember that the way this works is the U.S. establishes global platforms that everyone else uses. We are forgetting that it is U.S. leadership at the platform level, whether it's Google or Apple or what have you, that has brought us to this point where we have multi-trillion-dollar corporations that are leading the market.
I want to get into China in just one more second, but let me ask you, as a former board member many years ago of Apple, what do you make of the Epic Games lawsuit against that company and the idea of these different stores being monopolistic?
In consumption.
So I don't know enough about the dispute. I left the board a decade ago. The important thing about the app stores is that they provide some level of security, branding, and protection for the user. In China, for example, Google
are going to be cautious while we're still in the pandemic. So even though we have very low interest rates, et cetera, I think businesses will wait for clarity, and you hope that you're going to have a big pickup investment, over the next 12 to 18 months. But this is not the time for it yet, except for in a few special sectors.
Wonderful, James Sweeney. Thank you so much, the Credit Suisse chief economist there, and really an extraordinary call of a cautious view on the American economy. And of course, we'll see that off of Chairman Powell's speech here on Thursday. Lisa, I'm really taken by the dynamics in the bond market this morning. These are little moves, folks, and I understand it's sleepy August and summer, except the bond market's really sending some signals out, Lisa.
Well, the signal is that perhaps things are coming in a little bit better than expected, and there had been a narrative that the resurgence in virus cases was hampering economic growth in the United States substantially, and the high-frequency data doesn't bear out the pessimism quite as much as there was. You have to wonder, though, this isn't necessarily reflected in real yields. I find that interesting, Tom. Real yields still near their record lows, deeply negative.
Well, deeply negative, and that's the idea that, yes, the nominal yield has come up, and then against it are inflation expectations, subtracting them out, and the real yield is not to record low levels, but nevertheless really getting right back there, negative 1.01% as well. The other thing I'd highlight, we heard from Christopher Verone, the great trend technician at Strategas Research, and that is the idea of other things starting to percolate. This market is not just about the FANG stocks and the other big stocks, not about the newsmaking of Amgen, Honeywell International, and Mark Benioff, Salesforce.com. It's about technology and the follow-on from other industries. And Mr. Verone really pointing out how consumer discretionary is coming on. You see that with futures up 14. Coming up, this is a really important conversation. Barry Ritholtz will join us, and we will look at some of the market mistakes to avoid. Please stay with us. Lisa Abramowitz and Tom Keene with John Farrow, a simulcast. This is Bloomberg Surveillance.
With the First Word News, I'm Rishika Gupta. President Trump's defenders took the stage at the Republican National Convention last night. They defended his record and warned what would happen if Joe Biden is elected president.
Joe Biden is good for Iran and ISIS, great for communist China, and he's a godsend to everyone who wants America to apologize, abstain, and abandon our values. Donald Trump takes a different approach. He's tough on China, and he took on ISIS and won. And he tells the world what it needs to hear.
Meanwhile, the president tried to paint a positive picture of his response to the pandemic. He met with frontline workers in the crisis. It's a rare reversal for the Food and Drug Administration. Commissioner Stephen Hahn has backed off his claim that an experimental therapy had provided a dramatic benefit to coronavirus patients. At a press conference with President Trump, Hahn had said that blood plasma from survivors of the virus could save huge numbers of lives. Hahn now says he misspoke. In Kenosha, Wisconsin, a second night of violence between police and protesters. That's after a black man was shot by police in an incident caught on video. Police fired tear gas to try to disperse crowds. Wisconsin's governor deployed 125 members of the National Guard. And Tropical Storm Laura is set to become a powerful hurricane before making landfall along the northwestern U.S. Gulf Coast. According to the National Hurricane Center, that will happen late Wednesday or early Thursday. The storm is expected to have winds as high as 115 miles per hour. It's posing a threat to the region's oil and natural gas infrastructure. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
You see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
true diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index, true diversification.
We've put ourselves on the front foot again by adapting all the company, by resizing, by adjusting production rates, by adapting the supply chain as well to this new difficult environment.
An election year after Labor Day, it really heats up. Now, I don't think that neither the bonds or the stock market are really have it on its radar yet, but that's soon to change because it's not only the presidential election that's going to matter, it's the congressional elections that are going to matter and how we come out of that.
Good morning, everyone. Some technical difficulties there. We say good morning to you on our simulcast, Bloomberg Radio and Bloomberg Television worldwide. We've really tried to have some definitive conversations today. Regina Mayer with us on oil from KPMG, James Sweeney just moments ago on what we'll hear from Chairman Powell. But for those of you at home just trying to figure out what to do with your pot, whether it's a small pot or a big, big pot, Barry Ritholtz has rewritten the definitive essay that he and I know from our youth. I want to give credit here to Capital Guardian Trust out in Los Angeles and American Funds for their iconic study of market timing. They put it behind a marketing banner of Louis the Loser. But the bottom line is, Barry, you have revisited the mother of all issues, which is trying to time the market. What's new this time around?
Oh, God, so much stuff. You have a whole run of Robin Hood traders who are newly created geniuses who think they figured out the secrets to the market. You have the fastest ever sell-off, which made people kind of go woulda, coulda, shoulda, tapped out in February. And then one of the fastest ever recoveries, having people, if only I bought at the bottom in March, think about how much more strength my portfolio would look like. And these are the same classic mistakes that we see every time the market sees some volatility.
What's so important here, Barry, is it's asymmetric. There's a lot of focus on how to get out of the market, the fear of the market, the emotion of the market. But you and I know the mathematics is wildly asymmetrical, and the great mistake is a study of re-entry into the stock market. How do you best re-enter?
So there are a couple of ways to do it. The simplest way to re-enter the market, if you want to try and be one of those people who are catching the bottom, is to say, I probably am not going to know when the bottom is there. And when it is, the last thing I'm going to want to do is put money into the stock market. So the real simple way is to say, hey, the market drops 30%. I'm going to leg in a third of my spare cash. Market ends up down 40%. There's another 10%. And if the market goes down 50%, that's when you can really get aggressive. Go through history, you really have to work hard to find a down 50% broad market that wasn't a great entry point. The classic examples are 1932 or Japan after that first cut in half in 1989. But those are the outliers that prove the case. But the reality is the vast majority of traders and investors just won't have the discipline and won't have the ability to say, I'm going to get back in.
Okay.
They panic out and they miss the window on the bottom, which is why market timing is so unsuccessful.
Barry, you're speaking a different language than a lot of the traders out there who are seeing their friends sign up for Robinhood or whatever account they have, and they're getting rich quick. They're basically riding the Federal Reserve's largesse. That's been the narrative. And they're doing really well. They want to keep doing really well. Why can't they just continue to follow the Fed and get rich?
They can until the market reverses. How did these traders do in the end of February and March? The answer is they weren't locked down yet. They weren't bored. They weren't at home. They weren't missing casinos and sports gambling. So that's what a lot of these traders are using as a form of entertainment. The same exact questions were asked in the late 90s, you know, and we saw the same thing in the mid 60s. Hey, if you're not fully invested, if you're not long the hot stocks of the day, whether it's the Nifty 50 back in the 60s or the FANG stocks today, you're missing out. And you could throw in Tesla and a bunch of other names with that.
Barry,
the question is, how do these people do over an extended cycle, not just the fat part of the upcycle, which is what we've been experiencing since April.
Barry, over the extended cycle, you and I know the mathematics of this cold, which is you can market time and be successful, but there's always a one big move. And if you're in and out, you know, market timing, the cost of missing that one big move absolutely destroys your alpha. Robert Kirby at Capital Guardian Trust was legendary on this. If you try to beat SPX by 200 basis points over 20 years, if you miss one or two of the big moves up, your 200 basis points evaporates, doesn't it?
It's even worse than that. Two of the guys in my office, Michael Batnick and Ben Carlson, have done research that shows the biggest moves up and down all tend to come bunched together. They all tend to come very close. So if you're out and you timed it perfectly, you have to be ready to jump back in before the next 3 or 4% up move. And they all happen very sequentially, up, down, up, down, up, down, 3 and 4%. You miss one or two of those days, you completely defeat the purpose of doing this. It is so much harder and so much more challenging than people realize, because they see, hey, down 34%. I wish I would have sidestepped that. Up almost 50%. If only I bought at the bottom. It's far more difficult than it looks.
Well, Barry, thank you so much. This is a superb essay, folks. I'll send it out on Twitter once we get it out. Mr. Ritholtz, of course, writing for Bloomberg Opinion. His podcast is definitive. Lisa, we got a problem. We got a major, major problem here. We've got a guy in muni bonds.
Yeah.
In his tweet, when your son's high school starts the school year with online classes and he shares dad's office, he also gets to spend his mornings listening to Lisa Abramowitz and Tom Keene and Bloomers. That's child abuse, isn't it?
I was going to say, I'm going to have to tell my kids about that, and they're going to put in a petition for Muni Bond's son.
It's a window, though, Lisa, into really what everybody's dealing with. I mean, what if you have 3 kids, what do you need, 4 computers in the house?
Honestly, I could just say it's another world. My younger son beginning Zoom classes yesterday, people arguing with each other, photobombing each other, coming up with reloading kinds of distractions for their teachers so that they can't get caught checking out so they can play Minecraft. It's another world, Tom.
Well, we greatly appreciate your social media effort and your many emails into us as well. Lisa gets all the love notes, and as you well know, I am pro at receiving hate mail.
Love notes, bond yields.
They come in.
My love is expressed in yield.
In yield and basis points as well.
Basis points.
That explains that. Futures up 13, Dow futures up 158 as well. And again, if you're just joining us with this up market, it is extraordinary, the shift in yields, 0.70 on the 10-year yield. That is a stunning 5-beat move off of where we were Friday and into Monday as well. Curve steepening this morning out a nice 3 basis points. And that 10-year, the real yield, the real yield, it will be on this weekend. They're in negotiations now to see who is fit enough to replace John Farrow with the real yield, negative 1.00%. First Casman on Bloomberg Radio, an important interview on inflation that's coming up. Stay with us. Thanks to our team. This is a simulcast. This is Bloomberg.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I do double down on helping other Black founders, whether it's fundraising, hiring, growth, product, whatever it is that they need.
I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
From New York City, for our viewers worldwide, I'm Taylor Riggs, in for Jonathan Farrow. The countdown to the open, it starts right now, and we are 30 minutes until the opening bell this morning. Take a look at where we are within the markets. More record highs yesterday. Another day, another record high. The S&P 500 closing above 3,400 for the first time yesterday. That advance, well, it continues. And the good news is today, at least, we're doing it without tech, which is giving us some relief here as concerns about that narrowness continue to climb. And then the 10-year, speaking about climbing, we are now up to about 70 basis points on the 10-year. That is the highest going back in 10 days. We begin with the big issue, stocks continuing to push higher despite rising concerns over the rally's breadth and narrowing leadership. Stuart Kaiser of UBS saying investors are buying into the narrative of hope.
There's a lot of optimism priced into both to the Fed, I think, to the election as well as to vaccine outcomes. I think, I don't want to say it's consensus, but I think, a lot of investors we talk to are expecting relatively good outcomes on all three of those fronts. So in that sense, yeah, you're buying, hope to some degree.
But Morgan Stanley raising a red flag, saying that the top-heavy S&P could be susceptible to shocks, and it is primed for a correction, writing, quote, "We expect a growth scare to be followed by a rate scare over the next few weeks or months. That could finally give us the first tradable correction in the major U.S. equity indices." And joining us now is Bloomberg's Scarlett Fu. And Scarlett, it is a 4 basis point move up in yields today that caught my and perhaps Mike Wilson's attention.
Absolutely. It's a familiar theme, this idea that the tech-led rally makes the U.S. stock market more vulnerable. Mike Wilson's view on this is pretty specific. He says the current rally is underpinned by low bond yields. But come fall, and maybe we're seeing it already, when schools struggle to reopen and the economic data starts to turn a little bit more negative, he says Congress may be forced to pass a bigger than expected stimulus package, maybe something in the neighborhood of $2 to $2.5 trillion. That could trigger a sell-off in treasuries and a sharp move higher in yields at a time when the Fed is not ready to adopt yield control. He says the market's just not prepared for this scenario. This is what it looks like. This is the backdrop, right? U.S. stocks have made this incredible recovery from March lows. It's not across the board because when the pandemic first hit in February and March, the S&P 500 fell less than the equal weighted version of the index. That has led to a positive return year to date for the S&P, even though the S&P 500 and the equal weighted version of the index have each rallied more than 50% since March 23rd. You could see the equal weighted index is still in the red for this year. And you know the story when it comes to big tech. The biggest of the big are prized for their strong balance sheet, right? Their defensive characteristics, their perceived safety, and of course the unending demand for their goods and services in the stay-at-home environment. The rest of the S&P 500, not so much. Only 61% of S&P 500 members are trading above their long-term trend lines, their 200-day moving average, even as the S&P 500 makes a record high. That is a much lower proportion than previous peaks. Now, 46% of all tech names in the S&P have made new highs since the pandemic. actually, interestingly, the proportion for healthcare is even higher, 48% on hopes for a vaccine or treatment. But healthcare has a much smaller weighting in the S&P 500 than tech. It's the second biggest group, but overall, its weighting is half of what tech is, so its individual names are less influential on the index. You could see energy at the bottom there, but energy is so small within the S&P 500, it really wouldn't matter if energy stocks did better. As a whole, 32%, a third of the S&P 500's companies have made new highs, even as the index has reached new highs. Taylor?
Sounds like another unloved bull rally, if you let me weigh in on that. Scarlet Fu, thank you as always. Now, UBS continuing to see opportunities in the narrowing rally. Global Wealth Management CIO Mark Hafele writing, quote, laggards and long-term themes are likely to support the next leg higher. We remain constructive on global stocks and advise investors to remain in the market despite record highs for U.S. stocks. And joining us now is Mike Ryan, UBS Wealth Management Divisional Vice Chairman. What is the courage to stay invested with your clients despite new record highs every day?
Well, first of all, Taylor, I think we have to look at, again, one of your last guests talked about the fact that this trying to time markets around expected corrections just hasn't played out very well. Our expectations are that we're going to continue to see certain things that are going to support the market going forward. Look, you are going to see the Fed continue to play an enduring role here. The Fed has made it really, really clear here that they're going to keep rates as low as they have to for as long as they have to. And what they're also going to look for here is not just evidence that inflation is beginning to pick up. They need to see a sustained move above the 2% target level that they've identified before they're actually going to wind up changing rates. So this notion that the Fed's only in for the short term, we simply don't buy into it. In fact, we think one of the most long-term drivers of the market returns over the course of the next year is likely to be this enduring Fed. I also think we have to focus on, there's been a lot of concerns about the upcoming election and also potential second waves of COVID-19. Again, what we are seeing here is that while we're certainly seeing some impact in terms of increased infection rates, let's also remember we're seeing increased diagnostic, which means broader testing. But at the same time, we're seeing lower hospitalization rates and less acute type of cases. So in that case, it's unlikely we're going to see this sort of economic lockdown that we've seen in the past. So you put that in. And lastly, in terms of the election, I think there is some expectation that we could see an election that's going to be less than market friendly. So that could probably add to market volatility going into November. Well, let's also remember here that the sort of extreme outcome in terms of the election that's going to translate into a mandate for, say, for the Democratic Party, which is going to lead to both higher taxes, increased regulation, but then at the same time, it'd be offset by fiscal policy. That's going to be a mix that's still going to be relatively market friendly.
So, Mike, you're talking about three different things right there. Let me start with the first, which you mentioned the Fed. And I understand the Fed is in this for the long run. What is the risk, though, if you get a little bit of a move up in yields, maybe 20 basis points, or if you get 1% on the 10-year? Does that start to unwind a little bit of the low R, that low rate of return at which you've discounted those future values in the equity market?
Look, Taylor, if you were to get a large sustained spike in interest rates, it certainly could begin to challenge market values. The problem we run into is that when we're talking like 4 and 5 basis point increases off of historically low levels, these are not the kind of rate threats that we see as jeopardizing the market rally. So the market can manage through increases in interest rates as long as it's a validation that we are seeing a pickup in expectations of growth and also perhaps even some normalization of inflation.
You mentioned another risk about the election. One of the themes, of course, that we've been hearing about from the DNC and the RNC is this increase of higher taxes potentially. How are the markets pricing in that risk?
First of all, let's remember that unless you were to get an overwhelming majority in both houses of Congress, there's a certain limit to what you can do in terms of fiscal policy. While a Democratic nominee who would then be perhaps the incoming president might have a wish list of things he'd want. In addition to that, we do expect to see this cyclical pickup in global growth. Look, we've talked about the fact that we've had this extraordinary shock from COVID-19 and the collateral damage of all the economic shutdowns. As we begin to see those social distancing and mobility restrictions continue to ease, then we expect to see the economic recovery and expansion broaden. And that does benefit non-U.S. companies, especially emerging market companies.
The Euro area region in the Bank of America Fund Managers Survey last week was the most popular region for equities. And yet I've always heard as well that while the Euro area valuations are lower for a reason, are you positive and bullish on Euro area equities?
We don't have a specific overweight to the Eurozone for some of the reasons you just cited. Look, if we do see this broader economic recovery, then the Eurozone can do better as well. But we don't expect the Eurozone to lead the economic recovery process, and we certainly don't see them leading the market going forward. If we want to play that, we want to play that more through a globally distributed and globally diversified portfolio that includes exposure both to non-U.S. developed, but also to emerging markets.
Finally, I want to end here that you have a $3,500 price target, but the upside scenario within the U.S. on the S&P looks for a really positive scenario of a $3,700. What is the difference between a normal price target of $3,500 and more of that upside scenario of an extra $200? What gets you there?
One is that we see further progress on COVID-19. That is, we wind up seeing perhaps the therapeutics and even the vaccine development happens a little bit earlier than we expected, which means that we see an earlier return towards normalization of economic activity.
Mike Ryan, thank you as always for joining us. Coming up, the U.S. and China, they are reaffirming their commitment to the Phase 1 trade deal. That conversation coming up next with Skybridge Capital's Troy Gajewski. And as you see in the markets, more of that optimism continuing to be priced in. You, the S&P 500, 3,400 above that level for the first time yesterday. And a lot of that, well, it just continues again today. This is Bloomberg.
We are above forecasts. 1,800,000 jobs is the total non-farm payrolls, with 17,000 additional jobs added in terms of net revisions.
You still got 1.8 million with a big decline, almost a full percentage point drop in the unemployment rate, which will move to single digits easily in the summer and fall.
Leading up to this data, there was a lot of reason to suggest that the pace of increase had slowed. And in fact, what we see in this data is, of course, it has slowed, but the good news is that it is continuing, and it is continuing despite some slowdowns that we're seeing around the country as a result of an increase in cases.
People tend to focus on the growth rate. The big issue is the depressed level of spending and income in the economy, which is reflected in the level of the unemployment rate of around 10%.
Europe does, as you say, have some catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question.
The Boston Symphony Orchestra presents BSO at Home, a collection of concerts, at-home lessons, and behind-the-scenes stories to enjoy while you stay at home. Learn more at bso.org/at-home.
Beijing Biden is so weak on China.
Trump takes a different approach. He's tough on China.
The intelligence community recently assessed that the Chinese Communist Party favors Biden.
Joe Biden is good for Iran and ISIS, great for communist China.
They know he'll weaken us both economically and on a world stage.
The GOP kicking off the Republican National Convention, taking aim at Joe Biden's foreign policies, especially those related directly to China. For more, I want to bring in Kevin Cirilli, Bloomberg Chief Washington Correspondent. Your takeaway from night one.
Well, China was front and center in terms of the political attacks that the Republicans have lobbed against Democrats. I just caught up with RNC Chairwoman Ronna McDaniel, and she said that we're going to hear more of that this evening, Taylor, from Secretary of State Mike Pompeo in terms of foreign policy. But it was also an opportunity for the Republicans to talk about the economy on their terms. And you heard it from Senator Tim Scott, a Republican from South Carolina, who talked really about talking about conservatism through the lens of being more inclusive and diversity.
And Kevin, this all comes as the U.S. and China, they're also reaffirming their commitment to the Phase 1 trade deal in a biannual letter here. The U.S. trade representative was issuing a statement saying that, quote, both sides see progress. They are committed to taking the steps necessary to ensure the success of the agreement. Where do we stand on Phase 1? I feel like we've been in and out of this for a few years.
You know, we have been. And look, in terms of agricultural purchases, if you look at the data that's available on this front, Beijing has not made good on their word at all in terms of keeping up with the pace of agricultural purchases that they had agreed to. But according to that bilateral statement that we got from the administration, they say, quote, the parties address steps that China has taken to effectuate structural changes called for by the agreement. The parties also discussed the significant increases in purchases of U.S. products by China, as well as future actions needed to implement the agreement. Taylor, I think that, quite honestly, based upon my reporting, this conversation, which you'll remember had been delayed and postponed several weeks ago, comes the same week that China is going to be front and center of not just some of the top officials in the Republican Party, but also likely President Trump's speech on Thursday. So it would appear behind the scenes some keeping the agreement intact despite some fiery rhetoric this week.
And we'll keep our eyes out on that. And for you, coming up every day, and of course, leading into Thursday, Kevin Cirilli, thanks. Now, Troy Gajewski of Skybridge Capital is saying that trade risks are fading into the background, writing, quote, for the first time being, escalating trade tensions, much like the election, well, they're on the back burner. Over time, however, they will be a drag on growth, and it argues to keep a lower lid on multiples despite hyper-loose monetary policy. And Troy joins us now. Troy, where is trade tensions in your list of risks?
Yeah, it's not anywhere near the top 5. It might not even be in the top 10 now, which is obviously a very big shift between COVID, the pre-pandemic era, right, where that was front and center. When you're coming into this year, the number one risk to markets was major policy change coming out of D.C., and there were also trade tensions in the background. But to the point of the comment, you know, if you think about what's been driving markets, it's really been the pace of recovery. And primarily, multiples have expanded due to hyper-loose monetary policy. And then fiscal policy's done a tremendous job of plugging that hole in not only consumer balance sheets, but also helping with small businesses. So when you think of what's going to drive markets going forward, it's going to be back to whether the Fed will do more, which we think they need to. Do we get another round of fiscal stimulus? And can rates stay this low for long enough to drive further multiple expansion? You know, trade tensions just aren't high on the list of worries right now.
Long term, though, you say this could be a drag on growth. What is long term, and what type of drag on growth do you see?
Well, yeah, so if you think out 2-3 years, right? So if one assumes by the end of 2021, we're back somewhere near a normalized economy, maybe 5 or 6% unemployment, we're back at or close to GDP, you know, that's when, you know, the focus of policymakers will once again be, how do you optimize the mix of trade with China and others while still protecting American jobs? And so from just a pure economic standpoint, obviously the less trade you have, the less productivity enhancement you get, and that leads to slightly lower growth. But it's still not significant, right? You're maybe talking 10 to 20 basis points lower growth long term, even in a world with more heightened protectionism. So again, short term, not that big a deal. And even longer term, it's not like US GDP is going to be 50 or 75 basis points lower each year because we have more protectionism, regardless of who wins the election in November.
You also said that the Fed needs to do more. What more do you need to see?
Yeah, so it's actually pretty curious, right? The Fed balance sheet exploded, from February 24th onward, grew by approximately $3 trillion. Since May, it's actually shrunk slightly. Now, monetary or money supply comes as a lag, and that took a couple months to catch up. But money supply has actually been flat the past 6 weeks as well. And so when you think of one of the key drivers of markets, all things being equal, it's money supply and Fed balance sheet. So when we look forward, unless we get another muscular round of fiscal stimulus and we can keep the trajectory we're going at, we do see the Fed balance sheet expanding by several trillion more over the next year and a half. It's going to need to, in order to keep money supply in the economy, to make sure we get unemployment down to that 5 to 6% range by the end of next year, as opposed to staying elevated by 7 to 8.
Is that Fed expansion, though, overcompensating for a lack of action on the fiscal side?
Well, yeah, so it's actually, it's eerily similar to what happened in the crisis, right? And even though the fiscal measures took a while, that we did come out with TARP, and we did have the big, roughly $1 trillion stimulus, in 2009. And then after that, fiscal policy completely went away. And we actually went into a period of fiscal drag where we had, such tension between McConnell and Boehner and the Obama administration. They never could strike a powerful fiscal deal. So not that history necessarily repeats, but it's eerily similar where after a very muscular response, now you're seeing, politics and other kind of pedestrian matters interfere in a necessary fiscal stimulus. And so that does put more onus on the Fed again, very similar to what happened from 2010 to say 2014. So we for one would much rather see an appropriate balance between the two, right? Because the Fed buying Treasury bonds and mortgage-backed securities is not a substitute for direct stimulus checks or enhanced unemployment, which would be much better approaches. If we don't get that muscular stimulus, then the Fed will have to do more for far longer, very similar to what they did, again, from 2010 to 2014.
What do you think it will take to get Congress to talk about more stimulus? I'm thinking March 23rd, when the equity markets were bottoming out. It's almost as if they were telling Congress what they needed. Does Congress need a market sell-off in order to get pretty nervous and start talking about more stimulus?
Yeah, well, obviously they've been doing a lot of talking, but there's such a huge gap in what expectations are. And obviously the Democrats want state and municipality bailouts. The Republicans would like to avoid that, particularly for blue states. There's a few other issues they're wrestling with. But at this stage, it doesn't seem like there's any urgency anymore, primarily because, again, the economy never got as bad as people feared. It's certainly snapped back far faster, and market multiples continue to expand into that. So, without a similar event that we had, post-Lehman failing, which ultimately drove, the TARP rescue eventually, it's really hard to see them getting their act together in the short term. In the meanwhile, you do have the, Trump-directed stimulus checks, or more modest enhanced unemployment, which is helpful, but it's certainly no substitute for direct stimulus checks, full enhanced unemployment, and also another round of PPP, which again would be the best way to keep this trajectory of growth continuing, as opposed to more flatlining growth going forward.
Well, Troy Gajewski keeping me honest on the difference between talk and, of course, real action. So thank you there, as always, for joining us.
See you, Taylor.
And coming up, the analyst action that you need to know. It's next in our morning calls. And later, JP Morgan's David Kelly. He joins us for the opening bell. Stocks potentially looking, you guessed it, another record high. This is Bloomberg.
this is a step in the right direction. Perhaps it's a harbinger for more changes in the future, like the completion of the banking union.
This is Countdown to the Open. I'm Taylor Riggs in for Jonathan Farrow. It is time now for Morning Calls to look at some of the analyst action on the street this morning. First up, Piper Sandler raising AMD price target to $100 a share. Analysts seeing significant upside to the company's business model driven by strong execution and new products. Stifel upgrading Starbucks to a buy. The analysts expecting to see improving sales trends following aggressive adjustments to adapt to the pandemic. And finally, Citi upgrading Gap to a buy, doubling their price target to $24. The analysts saying markets are undervaluing the retailer's Athleta brand. And coming up, Dow embracing tax dominance, a big shakeup in the blue chip index. That conversation next. JP Morgan's David Kelly. This is Bloomberg.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Countdown to the Open. I'm Taylor Riggs in for Jonathan Farrow. We are just moments away from the start of trading, and take a look at that. Those futures, they extend an additional 7 points after closing yesterday for the first time above 3,400. Another day, another record gain. And here's the good news. We're doing it without the tech dominance. At least if you take a look at the NASDAQ, perhaps giving some relief to the market that we can continue to climb higher without the NASDAQ leading the way. Let's flip up the board, because what is not leading the day are those yields. yields. We're now up to the highest, 70 basis points or so. That's the highest since August 14th, up 4 basis points on the long end, going out 10s and 30s. All is crude, trying to catch a bid. A little bit of a risk on tone continues today. We want to do a risk on tone with Abigail Doolittle from the markets desk. She joins us now. Abigail.
Hi there, Taylor. Well, let's start out with some earnings movers and not so risk on, interestingly enough, Best Buy. Despite the fact that they put up a huge quarter, they beat earnings estimates, adjusted earnings by 63% on sales of $9.9 billion, 1% better than the estimate. But they've also warned that this surge around pandemic buying is not likely to last. In fact, it sounds as though they're seeing some signs of that in the current quarter. So that stock down about 5%. To the risk on side, though, J.M. Schmucker up about 5%. They put up a big quarter as well, beating top and bottom line. They also boosted the full year view. It looks as though folks are certainly stocking their pantry throughout the pandemic. And then Medtronic, the med tech company, also up about 5%. They beat earnings estimates that were down on a year-over-year basis, but encouraging, they are saying that the pandemic slowdown is likely over. As for other movers on the day, American Airlines is up once again after that 7-day antivirus coding was approved. It could help traveler confidence. So we have airlines and some cruise lines also higher. Not higher, though. Tiffany down about 4% on concern that the LVMH deal may not happen. The jeweler has extended the deadline by 3 months, and some analysts are concerned that this may be a sign that LVMH is looking for a way to back out. And then finally, Smith & Wesson, the gun company, is up 16.3%, really soaring. Cowen has reinstated with a positive rating, also with a street high price target of $24. In addition, the American brand segment has spun out. Smith & Wesson investors liking the news of both of those facts. That stock, once again, up 16% on the day, Taylor.
Abigail Doolittle, thank you. And a major shakeup in the blue chip index. The Dow Industrials reshuffling its members for the first time in 7 years. Regina Mayer of KPMG weighing in on that shift.
It does mark a shift in the era of where capital wants to go and what investors are going to look at. The tech stocks are clearly on a boom. You know, I wish I had made some different choices, early in the pandemic. But it does indicate that the large industrial, the behemoths of our time are probably not where capital wants to flow.
Let's bring in Bloomberg's Scarlett Fu now for more. A shift, Scarlett.
Certainly is. The cloud is replacing energy in the world's most oldest equity index, the Dow Jones Industrial Average. For the new look Dow, we're now looking at Salesforce, the enterprise software company, joining along with Amgen, the biotech firm, and Honeywell, an industrial conglomerate that is making its return to the Dow Industrials. They replaced ExxonMobil, which is the oldest member of the Dow. It's been a member since 1928, but has seen its stock price plummet because of falling demand for oil and sinking oil prices. It leaves only Chevron as the sole energy company. Raytheon completed its merger with United Technologies 3 months ago, and Pfizer also gets booted as well. Now, these changes take effect next Monday, and it marks the Dow's biggest shuffle in 7 years. It follows Apple's announcement to split its stock. We've talked a lot about how a stock split doesn't affect the value of a stock, just the price. But the Dow is an oddball among different equity indexes because it's a price-weighted average rather than a market cap-weighted index. So when Apple's 4-for-1 split takes effect on Friday, the representation of tech in the Dow gets cut as well. And this is a remedy to that. You can see that Apple is the single most influential contributor to the Dow this year, almost 3 times as influential as a runner-up Home Depot. Microsoft adding almost 400 points to the Dow so far this year. But overall, we've seen the Dow trail other indexes like the S&P 500 and the NASDAQ, in part because it's not as tech-heavy. It also can't include names like Amazon and Alphabet because they each trade at above $1,000 a share. So when you look at passive index funds that track the Dow, there's about $28 billion of passive index funds. Sounds like quite a bit, but it's actually a drop in the bucket when you compare it to the amount of money that tracks the S&P 500 or the NASDAQ, primarily because of their returns. Taylor?
Scarlett Fu, thank you as always. Joining me now, it's David Kelly, JP Morgan Fund's Chief Global Strategist. David, I'm going to rip up the script. I want to start this conversation on a little bit of a different note. You and I last spoke February 14th. We were at the Palace Hotel in San Francisco at the CFA San Francisco Society. I was interviewing you there as the keynote speaker. You correctly wouldn't shake my hand. February 14th, you said we're in the middle of a pandemic. You wanted to socially distance. I looked at you like you were a little weird, but boy, were you right. You have nailed the calls on the way this pandemic would turn out. And I'm wondering, too, if the way that the market response has responded to this pandemic, did you, too, be surprised by that reaction?
Well, I have been a little bit surprised. I mean, I think that there is a certain logic in the market doing better than the economy here. I mean, after all, the market is very concentrated in tech and in healthcare and consumer staples, which are really sectors that are not being that badly hurt by this, and also got this very low interest rate environment. And finally, a pandemic is a relatively short-term event. I mean, it's horribly long if you're living through it, but it's basically, you know, a year of vaccine, a year of a virus, and then you're done. And with all those things in mind, the market shouldn't have been hurt that badly, but it shouldn't be at record highs given the amount of uncertainty. So I think there's a lot of euphoria and exuberance built into this market right now.
You know, it's interesting. In February, you also boldly came out and said that this was the year when it was really going to favor international equities, even though in past years it really has been U.S. versus rest of the world. And the market has started to shift towards more of an international equity perspective. Do you still believe in that?
Yes, I certainly do over the next few years. I mean, I think that it's still the case that international stocks are pretty cheap relative to U.S. stocks. And people always ask me, you know, where can I find something that's cheap? It's not in bonds, it's not in U.S. mega caps. Well, international stocks are cheap. But I think another thing that's very important here is the dollar has begun to come down. And I think that's really the linchpin here. As the dollar comes down, international stocks can outperform. I think it helps emerging market equities. And also, I think international countries outside the United States, frankly, have done a better job in controlling the pandemic so far and will be able to get out of this pandemic environment in 2021 faster and with less economic and financial damage. So all that, I think, does favor international. And I think that a lot of U.S. investors are still underweight international, and they should do something about it while they've got a chance.
I know the pros are looking at the S&P 500 and not the Dow, but as you think about the Dow reconstitution, what is that telling you about the way people are thinking about what's important, where the capital is going?
Well, it does say something about where the capital is going in secondary markets, but of course, you know, we forget the point that, yes, there may be lots of money going into these mega cap stocks in the secondary market, but it doesn't mean more investment spending by these companies. Now, these companies are, of course, investing, but overall the economy is much more balanced than the market at this stage. I mean, the top 10 stocks in the S&P 500 account for a record high or almost record high share of total market capitalization. So I think it's a little bit misleading, but then the Dow is a rather odd index anyway. So I can understand why the Dow needs to be reconstituted here, but I prefer still to stick to a broader index.
Well, and David Kelly, you're going to stick with me. I just want to do a quick bird walk here because Citi's Tobias Levkovich has joined a growing list of strategists to recently boost their S&P 500 targets, raising his year-end estimate up to 3,300 and writing, quote, technicals seem to overwhelm fundamentals, and standing in the way of that might only indicate our intransigence. But the Fed will do whatever it takes to prevent U.S. stocks declining by teen-like percentages. Is the S&P 500 ready to drop 500 points? No. Let's bring in Bloomberg's Abigail Doolittle for more on this. Abigail.
Well, Taylor, another bear bites the dust, and it has everything to do with Fed liquidity. As you were just mentioning, Citi's chief equity strategist for the U.S., Tobias Levkovich, raising his price target, the firm's price target for the year end on the S&P 500, ironically to a level that's less than where it is now, but to 3,300 from 2,800. If we go into the Bloomberg terminal, we can take a look at the long ride up. I should actually say the short but swift ride up, more than 50% from those March lows, the fastest bear market in history, as you know. And as you were mentioning, it has to do with the Fed liquidity in easing, the negative interest rates that are driving investors into risk assets, and of course, what you were talking about, the breach of technical resistance levels. As for targets on the street, Taylor, lots of high targets out there. The average target for the year end on the S&P 500, 3,200 on an earnings estimate of $122. Now, valuation-wise, that's 28 times. But even if we grow that to 175 for next year, still 20 times. So stocks right now clearly not cheap. And the high estimate, 3,600 at the end of the year, the low, 2,800 on a depressionary estimate of $50 for the S&P 500. And then finally, that Fed liquidity, let's get a quick visual on it because it's really pretty stunning. Since last year, about $3.5 trillion of liquidity has been added, really going into lots of the risk assets. Let's hope it makes its way onto Main Street as well, Taylor.
Yeah, Abigail Doolittle, thank you there. I want to bring back in JP Morgan's David Kelly, who's still with us. David, we started out this segment saying that you don't think that we should be at record highs, even with the massive monetary and fiscal stimulus that's been injected?
Well, yes. I mean, I think you've got to take a long-term view in stocks. And I have a lot of sympathy with the idea that the Federal Reserve is going to try and protect the stock market as much because they think that's a way of protecting the economy in a still very troubled economy. But I think you've got to look forward a few years here. Once we get out of this pandemic, once we have a vaccine, frankly, I do expect economic growth to surge in a way that it did not surge after the great financial crisis. We'll come rocketing back towards full employment at a sort of pretty fast pace here, and that could push up inflation. And at that point, the Federal Reserve is going to have to tilt very quickly to trying to stop inflation from moving too high. And at that point, they may not protect the stock market. So, we can't, right now, it's, yeah, sure, they're offering protection in a pandemic. When the pandemic's over, the protection goes away also. And I would rather, buy in valuation for the long run. In the long run, U.S. value stocks probably look cheaper than growth stocks. There's a lot of stocks in the middle which aren't that expensive. It's just the mega caps are very expensive. And also international stocks, both emerging markets and developed countries outside the United States, are cheaper than U.S. stocks. I'd want to have a position there.
David, finally here, we know from level 1, 2, 3, it's always about that type 2 error, right? How to not lose money. What is the biggest risk that you see on the horizon on how to not lose money in this environment?
Well, I think it is just trading on momentum. In the short run, markets are crazy, but in the long run, they do react to economic fundamentals. And so don't buy something that doesn't make sense. If you run it through the spreadsheets, take a look at the money a company can earn. If you can never justify the price, then don't buy it at that price, because sooner or later, rationality will kick in.
Except, don't you think that discount rate, if it's at 0, does that not justify high valuations?
Yes, but it can't be at 0 forever, because it's only at 0 because the Federal Reserve is trying to protect the economy. And you've got this elephant sitting on the yield curve. Sooner or later, the elephant's going to have to get off. Those long-term yields are going to go up, and then pricing is going to be more realistic. And the things that are most sensitive to those long-term rates, long-term bonds and growth stocks, which are very long duration, they're at the greatest risk when rates rise.
David Kelly, always smart. Maybe next time it won't be another 6 months until we can see you. But again, maybe next time also we can shake some hands. David Kelly, thank you, as always. Coming up, looking ahead to Jackson Hole, we'll get the view from John Hurdle of Hurdle Callaghan. That conversation up next. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
This is Bloomberg's The Open. I'm Taylor Riggs in for Jonathan Farrow, and investors counting down to a virtual Jackson Hole, gearing up for Chairman Jay Powell's latest commentary. Leon Cooperman of Omega Advisors saying that the Fed is fueling a debt binge the economy can't handle.
They have created a real speculative bubble, in my opinion. I have to admit that I'm uncomfortable at the present time not because of the virus, it's a factor. I'm uncomfortable because I'm focused on something the market isn't focused on, and that is the amount of debt that's being created. Who pays for the party when the party is over?
For more, I want to bring in Michael McKee, Bloomberg's international economics and policy correspondent, and that is a big question.
Yeah, the other question is exactly where was Leon? We would like to all be sitting under those palm trees. Let's take a quick look at the debt he's talking about, at least from the Treasury Department side. Yes, we're at a record up to $25 billion, $26 billion now. And according to Leon, we're going to go over 27. And then the question is, who pays for that? Right now, we can do it because interest rates are very low. But as David Kelly was just saying, what happens when that elephant gets off the market and interest rates rise? That's going to be a problem going forward, but not one that's going to really come up at Jackson Hole, because most of the central bankers there have made the case it is time to worry about keeping the patient alive and then worry about the long-term treatment. Number of central bankers coming to Jackson Hole, including our own Jay Powell from the Fed, but also the heads of the Bank of Canada and the Bank of England, and also the chief economist from the European Central Bank. We'll be hearing from them. The Bank of England going to get the second most attention. Andrew Bailey, people looking to see if there's hints about how much QE might be expanded in the United Kingdom, or comments on how they're going to get out of it all when it finally comes to an end. But the real focus, as we've been saying, is going to be on Jay Powell and what he says about the Fed's new strategy. The year-long financial review has been completed, basically. And what are they going to tell us about their new framework? Well, in average inflation targeting, and we got a chart that kind of explains what the situation is here. Take a look at this. The red line, the 2% target, that's where they have been trying to hit. And as you can see from the white line, they never do. I mean, they hit it and then it just drops right back down again. And you can see what happened when the Fed, the blue line there, raised interest rates. It did push up inflation a little bit, and then it dropped back significantly, especially as the Fed cut rates and the economy fell apart. So what are they going to try to do? They're going to try to put inflation inside that green band, let it run above the red line. The question is, can they get it there? That's going to be the big issue. Another issue might be what happens with the fiscal side. Will Jay Powell and other Fed officials jawbone Congress into doing more? We had a very interesting, Taylor, overnight op-ed in the New York Times from Janet Yellen, the former Fed chair, who really took on Congress and said the Senate's on vacation while Americans starve. The Federal Reserve has largely done its job, she says. Congress cannot expect the Fed to keep everything together on its own when unemployment's exceptionally high and inflation is historically low, as they both are now. The economy needs more fiscal spending to support hiring, which brings us full circle to Leon Cooperman, Janet Yellen saying, don't worry about the debt now, spend more to get the economy out of trouble. Might mention very quickly that this Jackson Hole is going to be different. You can watch it. Everybody can participate. It's going to be online. It's going to be on the Kansas City Fed's YouTube channel.
Ooh, how many people are going to be doing that? I'll be watching. You'll be watching. Mike McKee, thank you for joining. Joining us now on the phone from Jackson Hole is John Hurdle Callahan, Executive Chairman. John, I want to start this conversation of where we started with Mike. How is the health of corporate balance sheets?
Well, you have to look at debt coverage ratios, not just debt. You know, I've always liked to listen to Leon Cooperman. He's terrific. But what I like to think about is that notion that all of us, our judgment is nothing more, nothing less than our collective experience. And none of us have experienced zero interest rates before. So as long as interest rates remain low, debt coverage ratio is more attractive than the simple debt level. And I think that's an important factor to remember. So we can pay the interest. And companies that have leverage, if rates remain low, that benefits their equity owners. So debt coverage ratio is an important factor, not just debt.
And that's an if, and we understand that the Fed has said that they're in this for the long term. But if rates aren't low forever, the elephant gets off the end of that yield curve, like we've been talking about with our guests this morning, then what happens?
It's not just the Fed that is keeping interest rates low. One could make the case that the secular trend towards interest rates, Chairman Bernanke has made this very clearly, that there are trends around the world, demographic trends, an aging population, a lower birth rate, and so forth, a higher savings rate. Interest rates are the price of money. So if you think about simple supply and demand, the more supply there is and less demand, the lower the price. So interest rates largely are low because the demand for money is low. Interestingly, we've seen the Fed pumping money into the system ever since the great financial crisis, and we haven't seen, as Michael just said, we haven't seen the inflation pick up. So what's going on? What's different this time? One could make the case that the Fed got in front of low interest rates to try and make them even lower to keep us from creating a fundamental crisis. So it's not just the Fed keeping interest rates low. There are secular trends around the world that seem to be working in that direction as well.
And are those secular trends becoming structural, where we are currently in a disinflationary environment for the foreseeable future?
Well, it's a very complex question, and I don't think I have the answer today. I would like to say Janet Yellen talking about fiscal policy as well as monetary, and something that people have been talking about for a long, long time is infrastructure spending. And it seems like the politicians in Washington are not patient enough or do not have enough vision to invest in the country. They're really just buying votes by trying to get checks directly to voters, as opposed to thinking about building a new tunnel under the Hudson River, for example.
You know, there's been a lot of talk about some of those inflationary expectations this week on the break-evens, but if you remove the liquidity premium, there actually is no inflation. Remind us again where we stand in that inflationary debate. I know you're talking about secular and structural trends here, but there are some who say that they see it on the horizon and others say, no, it's not going anywhere.
Well, we don't see it anywhere. The estimated inflation rate is about 1.6, 1.7 today. So the Fed's been trying to get it above 2 for at least 10 years, and it's not happening. And so there's something fundamental that's going on in the world that's keeping inflation rates low, and you just mentioned some of it. The key from a standpoint of investing, though, is that 10-year Treasury is the risk-free rate. That's the foundation rate. Now, interestingly, when you look at that rate and you compare that to, stock market valuations today, it makes the valuations not look particularly high. So when you look at a relative basis of stocks versus bonds, they're actually not overpriced. The real problem is that the whole thing is so low. In other words, the whole framework is low. Bonds are low yielding. So really, when you look at the 10-year Treasury, it's a negative, about 100 basis point negative return, which is very unusual. None of us have experienced this in our lifetime. And so then if you compare that to the stock market at 23 times, you actually have about a 5.5% risk premium. In other words, the stock market's promising you 5.5% higher than bonds. And that's actually about average. What isn't average is that the PE is 23 times as opposed to 15. So there's a very difference there between, and it flows into this notion of there is no alternative. People buy stocks because they can't get anything in bonds.
This is a conversation we could have for arguably 2 more hours. We're going to have to leave it here. John Hurdle, thank you as always for joining us. And coming up, the market moving events you need to be watching. It's next in our Trading Diary. This is Bloomberg.
see coming. Some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. keep on.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Time now for the trading diary. At the top of the hour, we're getting consumer confidence in new home sales. Then, second night of the RNC, durable goods on Wednesday. Another round of jobless claims Thursday, plus the main event. Fed Chair Jay Powell speaking at Jackson Hole, followed by U.S. personal income and spending on Friday. We are 26 minutes into the session. Another day of record highs. This time, though, rolling over just a little bit within the Dow and tech, but the S&P posting another 3 points. This was the countdown to the open, and this is Bloomberg TV.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA,
for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan, and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food. They're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look into him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off, these guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water. It's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He's all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has come in here yet. So we need a refill of this medication. After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá tan solo? I'm asking about why he's alone right here. He said things of life happens. Yeah, I'm here by myself. So ¿dónde vive acá? En la parte de... This is not a job. To do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jeevansaathi.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. jeevansaathi.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from traditional caste community conservative parameters to something like which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji you use the most to send to each other?
There's a bear, which basically we use for indicating a hug.
Yeah, that's our language basically. Bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade, and they helped us finalize the venue. And it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date, and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was like very humanly and emotions and feelings based.
Massachusetts Senator Elizabeth Warren has become a symbol of everything the Republican Party stands against.
Everyone gets a right to basic health care. We need strong oversight of these banks.
A legal scholar and a consumer advocate turned politician, Warren has branded herself as a champion of the working class and made a career out of standing up to big business. While rumors of a 2020 presidency bid remain just that,
I'm not running for president.
her Senate seat is up for re-election in 2018, and Republicans are already pumping millions into super PACs to defeat her. This is the story of how a law professor and politician came to be seen as the biggest threat to Republican values and the greatest hope for progressive America. Elizabeth Warren was born Elizabeth Ann Herron, the youngest of 3 siblings, on June 22, 1949 in Oklahoma City to middle-class parents. After waiting tables to help her family pay the bills, Warren became a star on the high school debate team. She landed a scholarship to George Washington University at the age of 16, but 2 years later dropped out to marry her high school sweetheart, Jim Warren. By 1980, Warren was a mother of 2, divorced and remarried, had earned a bachelor's degree from the University of Houston, a juris degree from Rutgers, and practicing law in New Jersey. Warren then went on to become an influential law professor, teaching, lecturing, and publishing highly cited work on bankruptcy and commercial law at 7 universities around the country, eventually settling at Harvard Law School. But Warren wasn't always a liberal lion.
Elizabeth Warren used to be a Republican, actually.
That's Stephen Dennis.
I'm a Senate reporter for Bloomberg. Around the time that Elizabeth Warren switched parties, she became a fierce opponent of a Republican drive to make it much harder to file for bankruptcy. She fought that for a decade. It ended up passing anyways.
While her efforts ultimately failed, her warning calls were heard in 2008.
We're in the midst of a serious financial crisis. Our entire economy is in danger, and without immediate action by Congress, America could slip into a financial panic, and a distressing scenario would unfold.
Professor Warren was tapped to help with oversight in the government bailout.
She would excoriate bankers and their bonuses and their practices.
Why should the U.S. taxpayer alone carry Citi?
She proposed a series of tough regulations, which became the basis for much of the Dodd-Frank financial law that we have today. That sort of catapulted her to national stardom, particularly among the progressive left.
Encouraged by her newfound notoriety, Warren declared her bid for the U.S. Senate on September 14, 2011. During the race, her opponent Scott Brown tried to derail Warren by accusing her of falsely claiming Native American heritage, a controversy that earned her the nickname Pocahontas. Nevertheless, she was victorious and won the Senate seat by a comfortable margin. She used her new tenure to challenge everyone, from banking regulators and Treasury officials to members of Wall Street and Congress.
I'm really concerned that too big to fail has become too big for trial. We need tough new laws to hold corporate executives personally accountable. No one should be above the law.
She called for Wells Fargo CEO John Stump to resign for fraud, introduced the Bank on Student Loans Fairness Act, and reintroduced the 21st Century Glass-Steagall Act. In 2016, after staying silent during the Democratic primary battle, Warren finally endorsed Hillary Clinton and had some harsh words for candidate Trump.
Donald Trump is a loud, nasty, thin-skinned fraud who has never risked anything for anyone, and that is just one of the many reasons he will never be president of the United States.
But she was wrong.
The forgotten men and women of our country will be forgotten no longer.
Warren wasted no time resisting Trump's agenda.
Have you ever managed or overseen a $1 trillion loan program?
I have not.
How about a $1 billion loan program?
I have not.
In the Donald Trump era, Elizabeth Warren has been playing defense and trying to prevent Donald Trump and his cabinet appointees from rolling back protections that she helped enact.
Warren actually found herself rebuked by Mitch McConnell for reading a letter by Coretta Scott King about Jeff Sessions' record on racism during his confirmation.
She was warned. She was given an explanation. Nevertheless, she persisted.
That moment became something that's on T-shirts, bumper stickers, slogans, and that really galvanized a lot of support for her. It's been very hard for Republicans to get much of anything done this year, and that's at least in part to this resistance movement that Elizabeth Warren has helped champion.
We are here to fight back.
Enough of Elizabeth Warren. Like you,
millions of dollars are being funneled to defeat Warren in the midterm elections in 2018. But it's the rumors of a 2020 presidential bid that has further prompted powerful donors to fund her opposition, often using the same playbook of constant and ruthless ad campaigns that many believe helped Trump win in 2016. It's anyone's guess if she will endure what Hillary could not.
You know, the question for Elizabeth Warren is whether she can go from being a liberal firebrand to somebody who can regularly get 60 votes for initiatives in the Senate and 218 in the House and drive an agenda, and whether she can bring together coalitions for political victories. That's the challenge, and we'll see what happens.
Sadiq Khan, the mayor of London, has made some powerful opponents.
He doesn't know me, never met me, doesn't know what I'm all about. I think they're very rude statements, and frankly, tell him I will remember those statements.
My message to Donald Trump and his team is that, your views of Islam are ignorant.
He's the first Muslim mayor of a major Western capital and proud of it. This is how Sadiq Khan went from the son of Pakistani immigrants to a lawyer, lawmaker, and now the mayor of London. Khan's parents emigrated from Pakistan. His father was a bus driver, his mother a stay-at-home seamstress. The 10-strong Khan family squeezed into a 3-bedroom flat in South London. He wanted to be a dentist, but TV in the 1980s convinced him otherwise.
Objection!
LA law with its swagger and ill-fitting suits caught Khan's eye. He graduated in 1991 with a degree in law from North London University and joined a human rights firm. Khan worked a number of high-profile cases, often clashing with London's Metropolitan Police Force. But he had bigger political ambitions.
This is what being a new MP is like, squatting on a bench in the absence of an office, dealing with letters from constituents.
Reports are just coming in of an explosion here in London.
And there's just explosions, and then it was just smoke everywhere.
Everyone's just asking what's happened.
Only 2 months after Khan entered the Commons as a Member of Parliament, London was attacked by Islamist extremists.
That day will stay with me for the rest of my life.
He spoke out against the attacks both as a London MP and as a Muslim.
He has been very clear about his opposition to violence, opposition to terrorism, and has set out to make the case for a more open and peaceful Islam.
That's Thomas Penny, one of Bloomberg's Westminster correspondents.
Here is a man who is a Muslim, and he is standing up and being open and straightforward and being clear that the problem here is not Islam, but it's Islamic extremism.
In 2015, a decade after the attacks, Khan ran for mayor of London, and his faith was back in the headlines. His opponent, Zach Goldsmith, trying to link Khan to radical Islam.
The debate got again personal and nasty.
The Goldsmith camp has called Khan extreme and accused him of associating with, quote, those who seek to do our police and capital harm.
It's a pattern of behaviour.
Even the former Prime Minister David Cameron repeated the allegations.
He shared a platform with Sajil Shahid, the man who trained the ringleader of the 7/7 attacks and accused the United States of bringing 9/11 on themselves.
But the smears didn't stick.
Zach Goldsmith ran a very negative campaign that was based on what people knew was a lie.
This election was not without controversy. And I'm so proud that London has today chosen hope over fear and unity over division.
After taking the mayor's office with a comfortable majority, Khan has brought a business-like efficiency to the role, scrapping expensive vanity projects like the Garden Bridge and the new Routemaster buses, which cost £350,000 each. The former lawyer who used to fight the police in court is now praised for his close relationship with them.
I was talking to a very senior police officer in the Metropolitan Police who said there was a sea change when he went into City Hall, and the police were saying how much they welcomed this because they knew where they stood and he was more straightforward to work with. So he works like a lawyer, he works like a government minister.
Khan's kept his faith at the fore. He's an outspoken voice for moderate Muslims across the world.
Donald J. Trump is calling for a total and complete shutdown of Muslims entering the United States.
Now, by giving the impression that Islam and the West are incompatible, you're playing into the hands of the extremists.
The ongoing spat between Khan and US President Donald Trump escalated when Trump went after Khan, misquoting him on Twitter just hours after the terrorist attacks of June 3rd, 2017. Khan's now one of the most prominent Labour politicians in the UK. In fact, a recent poll of Londoners found Khan was more trusted to keep the country safe from terrorism than the Prime Minister or the Labour leader. His story of going from the son of an immigrant bus driver to the mayor of one of the greatest cities in the world plays well with Londoners. But can he appeal to the rest of the nation? Has Khan got his eye on the top job? And is the UK ready for a Muslim Prime Minister?
What does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning, who used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the Collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness. Don't you think?
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks.
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network, factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
People think of Vladimir Putin, they think of capital P, power. And that's exactly the impression he creates. Whether it's physical power, firing different weapons, riding in various James Bond-esque modes of transportation, or tossing hapless opponents in judo. Or political power, ruling his own country with an iron fist, crushing his political opposition, or, most recently, being accused of meddling in foreign elections for his own benefit. This is how Vladimir Putin went from a poor, tough kid in Leningrad to a KGB spy to the very symbol of modern Russia. Vladimir Vladimirovich Putin was born in 1952 in Leningrad, which is now St. Petersburg. His father was a factory foreman and his mother a homemaker. It is widely said that Putin's public-facing tough guy persona can be traced back to him getting into fights when he was younger, which paved the way for him to take up judo. After getting a law degree from Leningrad State University, Putin joined the KGB Foreign Intelligence Service. He spent 16 years in the KGB. When Putin returned to Russia, he began his political career.
He went to work for Anatoly Sobchak, who was then the mayor of St. Petersburg.
That's Leonid Bershidsky.
I'm a columnist at Bloomberg View.
Putin thrived in Sobchak's administration because
he was sort of considered pretty efficient city official at that time. He was very loyal to Sobchak.
So loyal and efficient that
he was noticed by Yeltsin's close circle.
And those people soon brought Putin over to Moscow to work in Yeltsin's administration, where he quickly climbed the political ladder.
Then, of course, he was promoted to Prime Minister of Russia.
That's Dmitry Trenin.
I am currently director of the Carnegie Moscow Center.
Around this time, Yeltsin and the people around him, the so-called family, decided that Putin would become Yeltsin's successor. And then this happened. The apartment bombings were carried out in 3 Russian cities, killing 293 people and injuring more than 1,000. Putin immediately accused Chechen separatists for the bombings and followed it up with action.
He was credited with having a very successful military campaign against the terrorists.
And it worked.
After that, he became an heir apparent in the eyes of the Russian people.
3 months later, Yeltsin resigned. And on his way out, a famous exchange.
He was getting into the car in the Kremlin, and the last words that he addressed to Putin before getting into his car was, "Take good care of Russia."
So Putin took over as president, and 3 months after that, won his first election. But just because Putin won the presidency, that didn't mean he had all the power. This is Michael McFaul.
I was U.S. ambassador from 2012 to 2014. In the 1990s, there was a fire sale of all the things worth owning in Russia, and certain people,
the oligarchs,
did better than others in that fire sale, sometimes called privatization, and those people tended to be well connected with the Yeltsin regime, and they weren't Putin's friends.
But they probably miscalculated, thinking that they could easily find a way to influence him. It became impossible almost from the start.
From that very moment, there was warfare between him and the oligarchs.
That's when Putin gave the oligarchs a choice. Putin's way?
Some of those people from the 90s managed to figure out a new way of dealing with Putin and have survived.
Or prison.
Others could not find common vision, and so they lost their assets.
Khodorkovsky once was Russia's richest person, worth $15 billion, but he ran afoul of President Vladimir Putin and spent a decade in prison.
With domestic power consolidated, Putin focused on restoring Russia's global influence.
Putin is the guy who believes in the expansionist Russian state. Georgia and Ukraine and all the other Soviet republics that split off when the Soviet Union fell apart, he still believes that they're traditional Russian satellites. A lot of his strategy is about keeping them in the orbit. That Yeltsin line, take good care of Russia, that's how he understands it.
And he used annexation and invasion, as well as oil, gas, and trade to keep former Soviet republics in Russia's orbit. In 2008, Putin's 2 terms were up, and he decided to step down as president. Dmitry Medvedev stepped in as president, and Putin went back to prime minister. But really,
Putin never left power. He pretty much continued running the country, and Medvedev was a bit of a figurehead.
There was actually a period of cooperation between Russia and the U.S. that benefited both countries during Medvedev's presidency.
Because Medvedev did not have the same negative attitude towards the West as Putin did.
But when Putin came back to run for a 3rd term, in the lead up to the 2012 election, it was widely believed that both the presidential and parliamentary elections were rigged, and Russians took to the streets. Putin blamed the protests squarely on America, and more specifically, Secretary of State Hillary Clinton.
He believed that she had sent, and this is his words, a signal to demonstrators.
Still, Putin won by a huge margin and set about crushing the protest movement immediately upon his return to the Kremlin. Over the next few years, Russia's economy tumbled. Putin annexed Crimea, leading to sanctions. The price of oil fell drastically. The ruble hit a new low, and America played down Russia's influence, with Obama calling Russia
a regional power.
Despite all of that, Putin's approval rating remained sky high, and then an opportunity for payback.
I think I'd get along very well with Vladimir Putin.
In 2016, there was one candidate who called Vladimir Putin very smart.
Trump exhibited tolerance towards Putin's actions annexing Crimea, and similar views on NATO and sanctions.
Secretary Clinton didn't support any of those views.
Even though Putin denies any wrongdoing,
U.S. elections.
Yes.
the U.S. has accused Russia of being behind the leaking of 20,000 Democratic National Committee emails, which many say helped Trump beat Hillary Clinton in the presidential election. Which leaves us here, with the possibility of a President Putin until 2024, positioning Russia to be the world power he always imagined it should be.
Jack Ma is Asia's richest man and most recognizable business tycoon. He's the chairman of Alibaba, China's e-commerce giant and one of the 10 largest companies in the world. Yet he still wants more.
We know where we're going. We want to be the 5th largest economy.
Big words from the man some call Asia's Jeff Bezos. He's confident, he's charismatic, and he's definitely not the average CEO. This is how a poor school teacher went from the classroom to being one of the most influential multi-billionaires in the world. Ma was born in China's southeastern city Hangzhou in 1964. His parents were traditional musician storytellers. As a teenager, he started to learn English from foreign tourists after China opened up in the late 1970s.
And then for 9 years, Jack Ma hung around outside the Hangzhou Hotel, which is now called the Shangri-La. He would get up at 5 a.m. to talk to travelers.
That's Bloomberg technology reporter Lulu Chen.
And I cover China Internet for Bloomberg.
Ma failed China's National University entrance exam twice before being admitted to local teachers' college. He graduated in 1988. He applied for 30 jobs and got rejected, including from the fast food giant KFC.
When KFC came to China, come to us say,
24
people went for the job. 73 people accepted. I was the only guy.
Then Ma got a job at a local university and taught English there for about 5 years, earning just $15 a month. On the side, he started a translation company with several friends. During a company trip to the US in 1995, Ma had his first encounter with the internet at a friend's place in Seattle.
I searched the first word, beer. I don't know why, because it's easy to spell, baby. And I see beers from Germany, beers from USA, beers from Japan, but there's no beer from China.
So he searched for the word China instead and still couldn't find anything. And that got him thinking. He wanted to build something that would put China on the world's map.
He started China Pages, a Yellow Pages-like website, but it didn't take off. Then Ma joined a government agency in Beijing to help set up a website. By 1999, the internet stock boom had gripped Wall Street, and back in his Hangzhou apartment, Ma decided to try again. With his wife and a group of friends, Ma raised $80,000 and set up Alibaba, a site that allowed businesses to sell stuff to each other.
人家美国人强就强它的硬件，强就强它的系统基础，这方面确实比你高。但是玩信息玩软的，中国人的脑袋绝不比你们长。我们在座的所有人的脑袋绝不比你们长。
By 2000, Alibaba had raised $25 million from investors, including Goldman Sachs and SoftBank.
He had no business plan and zero revenue, but his eyes was very strong eyes.
In 2003, Alibaba started Taobao, a platform for individual sellers to trade with each other, and publicly declared war against eBay, who had started to make a foray into China.
Jack Ma has this famous saying that Alibaba is a crocodile in the Yangtze River, whereas eBay is a shark in the ocean. And if they fight eBay in the ocean, then they'll lose. But if they fight them in the Yangtze River, then they have a home base advantage.
In 2007, just 1 year after it forced eBay out of China, Alibaba debuted its business-facing division on the Hong Kong Stock Exchange. But it delisted 5 years later as its performance sagged. But in 2014, Alibaba raised $25 billion in the world's biggest IPO in New York.
Everybody should have a dream. What if that dream comes true?
After achieving dominance in the business of e-commerce in China, Alibaba has been building an internet empire worth $472 billion, with businesses in cloud computing, online video streaming, movie production, healthcare, sports, retail, and even news media.
Alibaba buying into South China Morning Post really raised eyebrows. This is the largest English newspaper in Hong Kong, and it shows that Jack Ma's ambitions weren't limited to e-commerce. He wanted to influence not just Chinese users, but also overseas users as well.
The US has criticized Alibaba for allowing companies to sell counterfeit and poorly made goods, but in China, it enjoys the favor of China's government. It's part of Ma's company philosophy.
In love with the government, but don't marry with them.
Jack Ma is an extremely fortunate man for jumping on the internet sector so early. Note that this is a person who has no coding skills at all. He's a natural showman and a gifted public speaker and really able to convince others to believe in his vision.
Ma's vision of growing Alibaba to be the world's 5th largest economy faces strong competition at home and abroad. It will require more than just naked ambition and charisma, but Ma is great at getting himself in the right place at the right time. So far, it's served him well.
Peter Thiel is a walking contradiction. He got his bachelor's and Juris Doctorate from Stanford, but speaks out about the horrors of higher education, saying college is
as corrupt as the Catholic Church was 500 years ago.
He's a staunch supporter of the free press, yet he bankrolled a lawsuit to bankrupt an independent media company.
But these were not journalists.
And most of all, he's an immigrant and libertarian who's the most public supporter of Donald Trump in all of Silicon Valley.
What Trump represents isn't crazy, and it's not going away.
This is the story of how an openly gay, immigrant genius, libertarian billionaire went from tech contrarian to Silicon Valley's biggest Trump supporter. Peter Thiel was born on October 11, 1967 in Frankfurt, West Germany, to Suzanne and Klaus Thiel. Peter's family emigrated to Cleveland, Ohio when he was 1. An Ayn Rand devotee during his youth, Thiel attended Stanford University majoring in philosophy.
His Stanford experience shaped a really big part of who he decided to surround himself with.
That's Lizette Chapman.
And I cover technology and venture capital here at Bloomberg.
He and his Stanford friends made their first big splash in tech with PayPal. After selling to eBay for $1.5 billion, they would become known as the PayPal Mafia for each incredible success after PayPal. For Thiel, that began with an early, modest $500,000 investment in Facebook.
And in VC speak, early means big risk, but also big reward. He turned that initial $500,000 investment into more than $1 billion in cash.
But Thiel was just getting started with Facebook, and he went on to make a whole bunch of wildly successful investments.
From SpaceX to Airbnb to one of the largest, most powerful companies in the United States, if not the world, and of course that's Palantir.
The incredibly controversial secretive data mining startup he founded with his colleagues from PayPal. It connects data silos and then allows non-technical people to search that information for patterns. Data like
financial information, feeds from video cameras, biometric details, passport information, flight manifest.
Palantir doesn't talk much about how they collect this data, who has access to it, or what they do with it. But they have contracts with
the Department of Homeland Security and the CIA and the Department of Justice and the Securities and Exchange Commission
and several other federal agencies. It's the richest company you've never heard of, valued at $20 billion. But there are plenty of obscenely wealthy people in Silicon Valley. What makes him different...
He's a complex ball of multiple contradictions.
Take college, for example. Even though college was extremely important for Thiel, there's something called the Thiel Fellowship.
In exchange for dropping out and a promise not to pursue college, Thiel would give them $100,000 each.
You basically tell people that if you get a diploma, you're saved. Otherwise you go to hell. You go to Yale or you go to jail.
Also, his relationship with the press.
Here's another contradiction. He's donated to free press initiatives, including the Committee to Protect Journalists.
But he also secretly spent tens of millions of dollars bankrolling a lawsuit filed by Hulk Hogan over the publication of a sex tape and bankrupting the independently run Gawker Media. Why did he do this? Because in 2007, one of Gawker Media's blogs, ValueAg, outed him as gay. And with the lawsuit, he
found an opportunity to get back at them by funding the lawsuit that Hulk Hogan was able to bring then, but he wouldn't have been able to do that without Thiel's money.
And finally, Thiel's biggest contradiction, his endorsement of Donald Trump.
When he was asked about his support for Trump, he was surprised at the outrage that came with it from many of his colleagues in Silicon Valley. He didn't want more of the establishment.
No matter how crazy this election seems, it is less crazy than the condition of our country.
After briefly supporting Carly Fiorina in the primaries, Thiel pivoted to Trump, donating $1.25 million to Trump and his associated super PACs in October 2016. And he didn't just help Trump financially. He gave a full-throated keynote speech supporting Trump at the Republican National Convention.
I'm not a politician, but neither is Donald Trump. He is a builder, and it's time to rebuild America.
And when Trump was finally elected, Thiel was given the reins to an enormous amount of power.
And I want to thank you, man. You have a very special guy.
He was named the transitional advisor. And in that role, he did a lot of interviewing and a lot of vetting to fill hundreds of cabinet positions and different jobs within the administration.
But it turns out Thiel's support isn't unconditional.
Talking to people who spend time with him, I have also heard that he is no longer a great supporter of Trump.
It was reported that Thiel was unhappy with the direction of Trump's presidency. Ever since, he's been mum, making no public appearances, no statements, and staying out of the spotlight altogether. Although there have been suggestions that Trump could tap Thiel for a top intelligence post or ambassadorship, there's no indication he'd accept.
He's described his relationship with politics as schizophrenic. He gets really involved, and then he runs away as fast as possible.
Whether Thiel takes a new position or simply continues as a board director at Facebook and Palantir, at just 50 years old, he's primed to wield some serious influence in technology and politics for decades to come.
Two 2016 was again the hottest year on record, and the previous 17 years have seen our 16 most scorching. Scientists overwhelmingly agree. Global warming is the culprit. And it's just getting started. Ice caps, extreme weather, wildfires, droughts, and the hits keep coming. What are we doing about it? In 2015, the world took its boldest step yet to stem climate change with a historic accord in Paris. But now comes the hard part. Nations must change energy policies and invest huge amounts of money, and they will likely do it without the United States. President Donald Trump announced on June 1st that the U.S. would withdraw from the accord.
The reality is that withdrawing is in America's economic interest and won't matter much to the climate.
Here's the situation. Decades in the making, the Paris Agreement united the U.S., China, and more than 190 other nations in a push to limit fossil fuel pollution. The UN-sponsored plan secured pledges to cut greenhouse gases, the emissions that trap heat in the Earth's atmosphere, in an effort to avoid the rising seas and other environmental disasters that climate models predict. But even if all pledges are met, the globe is expected to warm by as much as 3.4 degrees Celsius this century, more than the UN target of well below 2 degrees. Meeting the Paris Agreement means that governments will have to offer more incentives for clean energy, scale back support for fossil fuels, make emissions more costly, and reduce deforestation. It's estimated that the deal will require $13.5 trillion of spending through 2030. Here's the argument. Unlike past climate pacts such as the Kyoto Protocol, each country set its own Paris targets and then promised to revisit and improve them. The U.S. was primed to play a lead role in climate change, but Trump's Energy Independence Executive Order reverses Obama-era rules and directives put in place to combat climate change, and expands production of coal, the dirtiest fossil fuel. The resulting policies threaten the global fight against climate change. Without the U.S. commitment to emissions reduction, other countries may join it in abandoning the Paris Agreement. This could make it almost impossible and even more expensive down the line to stop climate change. Optimists argue that the shift to a lower carbon future is already underway. Businesses, cities, and U.S. states, such as California, are already investing in wind and solar and taking other steps to make it work.
I've actually been called an environmentalist, if you can believe that.
There's an inherent attraction to light and being human. And I think on a very deep psychological level, light is this way in which we experience the energy surrounding us in a very personal manner. My name is Matt Dilling. I'm the founder of Light Bright Neon Studio, and we manufacture, produce, and restore neon works of art and design. origins of the creative content of a lot of the work at Lightbright comes from a variety of sources. Sometimes people come with a napkin sketch. Some people come with an Adobe Illustrator file. And we have a whole design team who then we kind of work together to help create layouts of what it might look like. Scale it up and create a paper template using a pen plotter. And that paper template actually becomes our guide for what we're going to bend the neon to. We take from the office into the glass shop. We pick out the right size tubing with the right color for the right size project. From there, we heat up the glass tubing. The torches heat the glass well in excess of 1,000 degrees in order for it to get into its molten state. We heat up and bend the glass tubing to match the template. One of our chandeliers has over 100 different bends in it. So each one of those bends has to be marked for a heated up bend. We also have to allow the glass to cool between the bends so that the next area can be worked on and heated up in its own unique fashion. It turns into spaghetti, and then we have to make sure that that spaghetti lines back up and cools to the template. We use a blow hose to connect our mouth to the tube, create a volume that's closed, and we can control the pressure in there with our mouth. There's just a variety of challenges that come up inherently in working with glass. Glass can crack due to stress, and sometimes you'll just have a batch that all it wants to do when it gets near a torch is crack. After we've bent various components, we have to go in using the crossfire or the hand torch and actually weld all of those pieces together. The last step on that is then to weld on electrodes onto either end. Each one of those steps is very, very specific. I draw inspiration from so many different experiences. It's hard to come up with one thing that's particular, but one of the ways that I really am able to connect with the creative is to float. Floating is a similar experience to meditation, to psychedelics. Going into a blackened room and laying out in a body of water and salt that's heated to your body temperature, and it allows for all sort of external stimulation to fall away. And your internal world really begins to bubble up and manifest. You really get to experience a different relationship to your mind. I work with neon because I can't not work with it. It's so challenging and so rewarding. And those things are so intertwined that there's no way of separating it out. I learn so much and continue to learn so much by working with it. I find so much inspiration in working with it, and I just continue to experience new and different things through the medium. It's that close to me at this point. Once the neon tube is completed, we have to hook it up to our manifold for bombarding. The manifold is opened, a vacuum is drawn. We check the tube for leaks with our Tesla coil. We close the tube back off, and we heat it up using a very large and powerful transformer. As the tube is heated up, it releases anything that's not inert inside the tube, and we evacuate that out. We introduce the gas into it, and we seal the tube off, sealing into that tube whatever gas we introduced into it. I think my favorite part of making a neon light is when I see it lit up for the first time. Different gases, when electrified, emit different wavelengths of light. Neon gas is this very bright orange, fiery red color. Argon gas creates a very intense blue, but that light output that is produced can then be expressed in a different wavelength by coating the inside of the tubes with a phosphor coating that takes that one wavelength of light and emits a different wavelength. bring it over to the aging table, where we hook it up to an age-in transformer and allow it to settle, age the gas in that we've introduced to it. There's always a stray particle of something left inside the tube. But that time that the oxide coating can act to scrub whatever is left inside the tube while things are getting settled into place. Once the tubes are aged in, we move on to our process of assembling two halves of the fixture together in a jig, gluing up the center of the fixture to its spindle. Once the adhesive dried, we would connect the wires from the fixture together into a transformer, and we turn on power and it lights up. Part of what we love about what we do here is that we try and put out into the world the kind of things that we'd like to see. I still am surprised when it lights up. I'm still excited when I get to see it illuminated. There's an ineffable quality to it. To me, is this insight into the inner workings of the universe. It literally is. It's a way of looking at what is surrounding us in the cosmos in a new light.
It's a bit like an addiction. You've got to make something. You have to do something. It's borderline obsession. And every bike we build is my favourite bike at the time, and as soon as it's done, I want to build another one. It's Spend cycles is something I've been thinking about ever since I started cycling in my late teens. We want bikes that ultimately you'll really enjoy riding. There's never a bike that's the same. There's always a slight change. And as we build them individually as well, they have the marks of a bike that's built by hand. Most people I know cycle have an idea of their dream bicycle. And it may be an evolving idea you've had in your head. And we've worked with a lot of people that have come to us with sketches and scrapbooks. It's really, really nice to build something that's just one-off and unique. I think a lot of people see a bicycle as two wheels and a frame in the middle. There are a lot of subtle changes and nuances in design which can change the riding characteristics quite dramatically. I'm a really big fan of modernist architecture, and the simplicity of a modernist building is really hard to achieve. And with some of our bikes, they may look very simple, but I think people should not underestimate the time and effort that goes into designing a product. Tubing is key to a bike's feel and ride. Reynolds tubing has been in my life ever since I can remember. Growing up, I could never afford a frame manufactured with their tubing. We can now put a badge on our bike saying manufactured at Reynolds, which is a sort of thing as a kid I just wouldn't have believed was going to happen. Every part of the bike has a specific tube. It's not universal. The first thing we do is get the tubes out, check they're correct, check the wall thicknesses, sand the edges, make sure it's all really clean, because if it's not clean, the tubes won't join together correctly. We build in steel because I still believe it's one of the best materials to use. It's been used in bikes since the late 1800s, and they're still using it now for a very good reason. It's the flexibility that we can replace the tube, repaint the bike, and you wouldn't know it's damaged. I just like working with it. It's very sculptural. This isn't sort of aerospace precision engineering. It's a steel rule and a marker. So when we're cutting the tubes, it's within a mil or two. But what we're trying to do is take the best from bicycle building in the past and add a little bit of modern flair to it. There's various techniques for building bicycles. We do a thing called fillet brazing, where you connect a pipe together. We use a bronze rod and a flame. We heat the tubes up to the same temperature and we fill the joint with bronze. And it gives a very, very sort of fluid, lovely, sort of quite sculptural feel. You've got to practice. You've got to be able to judge material temperatures. You've got to just look at it and you just get a feel for it. It's a stage where your tubes start to look a bit like a bicycle. My father's a jeweler. He'd make sort of very pretty things, which are lovely, but for me, they don't really have any function. What I love about bicycles, you can start on a Monday with a box of tubes. You can be riding it by the weekend, and it can last you for the rest of your life. Outside of the frame and forks, the other most important part is the wheels and tyres. When you build the wheels, you have to lace them, so there's little holes going all the way around the rim. You poke the spoke through. We do build all our wheels by hand here because a machine can't get 30 years worth of wheel building experience. Colour is very, very personal. With any of our bikes, you can have them painted whatever colour you want. We've matched one to a teapot, so we can get that scanned and we can match that, or someone's favourite item of clothing. I like to let the bike sit for 4 or 5 days minimum, just so the paint can have time to cure a little bit, and then we assemble it. We get out all the new components, and it's a case of putting them together. Some bikes you can assemble in 3 hours, some will take 3 days. And we've built bikes that cost in the £10,000 plus mark. Some people, they're saving up and this is their bike and they're going to own it for the rest of their lives. So we just want to make sure they get the right thing. I think the bike for me was the first time I had some freedom. So as soon as I had one, I was off. A lot of people still get that thrill as when they were a kid blasting down a hill, wind going through their hair. It's fun. Everyone has their favourite jacket or something. It just makes them feel good. If you've got a bike that fits well, you actually feel part of it. Building bicycles as a creative outlet is fantastic. It's not something you do because you're going to get a big paycheck at the end of the day. You do it something you have a passion for it.